your strategy might actually work and you can still keep failing problems. That's the part nobody wants to admit, because passing a problem isn't just a strategy test, it's a pressure test. It tests what happens to you when there's a daily drawdown limit, a profit target, a payout date, and that quiet voice in your head saying, I need this one to work. And that's when everything changes. The same setup you trusted in backtesting suddenly feels risky. The same rules you wrote down suddenly becomes flexible. The same trader who said, I'll stay disciplined, suddenly starts negotiating with the chart. So maybe the reason you keep failing isn't because your strategy has no edge. Maybe it's because your strategy was built for the market, but you were never trained to execute it under firm pressure. And once you understand that, you stop blaming every failed account on the entry model, and you start looking at the real place the account breaks. Because the first thing we need to separate is the strategy and the trader using it. So in this video, we're going to break down why a strategy can look good on paper, but still fail inside a problem where the account actually starts going wrong, and what kind of execution structure you need so pressure stops making decisions for you. All right, let's get into it. So before we blame the strategy, we need to separate two things most traders mix together: the strategy itself and the way it gets executed. Because a lot of traders confuse having a strategy with being able to execute one, but they're really not the same thing. A strategy is what you're supposed to do. The execution is what you actually do when the account starts feeling personal. And this is where prop firms expose people, because on paper, your strategy can look clean. Your backtests can make perfect sense. Your screenshots can look perfect. Your rules can sound disciplined. But none of that proves you can actually follow it when you're one trade away from your daily drawdown. Because that is where the real trader comes out. Not the trader who made the plan on Sunday night. Not the trader who wrote, I would only risk 1%. Not the trader who said, I'm with my setup. The real trader is the one who shows up after the first loss, is the one who decides whether to stop or take one more trade. The real trader is the one who who either follows the stop loss or it gives the trade a little bit more room to breathe. And that's why a working strategy can still produce a failed account. Not because the edge disappeared, but because the trader started interfering with it. You change the risk, you change the entry, you change your stop, you essentially change your patience. And then you blamed the strategy for results it never actually got a clean chance to produce. Guys, this is the part we have to be honest about. Sometimes the strategy didn't fail. Sometimes we failed the strategy. And prop firms make that more obvious because they add something normal trading does not always add at the same intensity. That is artificial pressure. So the first lesson is simple. Your strategy can be clear, but your execution can still change. One of the biggest reasons it changes is because a prop firm account makes the same trade feel heavier. Because when you trade in a normal account, the market is already difficult enough. You still have those losses. You still have uncertainty. You still have days where price does something completely different from what you would normally expect. Or at least the strategy has room to breathe. You can take a loss and come back tomorrow. You can wait for the next clean setup. You can let probability play over a larger sample size. You can remind yourself, this is just one trade. Or the difference is, in a prop firm, one trade really feels just like one trade, because now that one trade is sitting underneath a daily drawdown limit, a max loss rule, a profit target, a payout date, a dashboard you keep checking every few minutes. And sometimes, if we're being completely honest with ourselves, the quiet hope that this account might finally change something for you financially is always looming in the back of your head. So you're not just trading the setup anymore. You're trading everything attached to the setup. That's why a setup you normally take calmly suddenly feels dangerous. A normal loss suddenly feels personal. A valid entry suddenly feels like a threat to the account. And instead of asking, is this my setup? You start asking yourself, can I afford to lose this? And once that question takes over your strategy is no longer leading the trade. Fear is. Urgency is. and the dashboard, the account dashboard, is leading. This is why so many traders don't actually fix the real problem after failing. They run straight into the next strategy. And the reason they do that is because changing the strategy feels easier than looking at what the pressure actually did to their behavior. So the setup may not have changed, or the meaning of the setup definitely has. And when that pressure leads to a failed challenge, most traders don't review how they behave. They go looking for the next new strategy. And the next strategy always feels like a solution because it gives you something to do. It gives you hope. It gives you that feeling of, okay, this time I've probably found the missing piece. So after a failed challenge, you start adjusting everything. You add in a different time frame. You change the entry model. You bring in a different pair. You bring in more confirmations, tighter stops, wider stops, a new YouTube video, new backtest. It all feels like progress. But the question most traders skip is one thing that actually matters the most. Did this strategy fail, or did you fail to follow it? Because these are two completely different problems. And if you diagnose the wrong problem, you will keep applying the wrong solution. This is why I call the strategy escape loop. You fail to account, you blame the strategy, you find a new model, feel hopeful again, then the same pressure comes back and the same version of you comes back with it. So the real danger is not changing strategy. Sometimes a strategy does need work. The real danger is changing strategy before you've honestly reviewed your execution. Because if the actual failure point was your behavior or the risk, then the next place we have to look is risk behavior itself. So before you replace the strategy, just check whether you actually followed it. But to do that honestly, you need to know the exact moment where the account really started going wrong, because most problem failures don't begin with just one bad trade. They begin with what the trader does after that trade. That's the part people underestimate. A good strategy can lose, a clean setup can still fail, a perfect looking entry can still hit your stop loss regardless. That is not the issue. Losses are part of the business, or losing control after the loss. That's where account starts to break. There's a moment after a loss where the trade is finished, or your emotions are just getting started. That moment is what I call the risk reaction point. And this is where you find out if you actually respect your risk rules, because before the loss, everybody believes they are disciplined. After the loss, you find out. This is where 1% risk quietly becomes 2%. This is where I'm done for the day becomes, let me just take one more. This is where a stop loss gets removed because the price is just almost turning around. This is where you close a winner early because you're scared that you could just give everything back. This is where you take a lower quality setup because you want to recover before the session ends. And none of that is in your strategy. None of that is part of your strategy. That is risk behavior. So when you review a failed account, don't only ask, was the setup valid? You should ask yourself, what did I do after the setup lost? Because that answer will usually tell you a lot more than the entry ever will. And this is why a strategy on its own is not enough. You need a system around the strategy that protects you from yourself. The loss is not always the failure. The reaction after the loss usually tells you the truth. So if the real problem is what happens after pressure hits, the solution cannot just be another entry model. You actually need a system around the strategy, because your strategy can tell you where to enter. It can tell you where your stop loss goes. It can tell you where your target is. It can tell you what confirmation you need. But most strategies don't tell you what you need to do when the pressure shows up. They don't tell you what happens after 2 losses, or what happens when you're close to the daily drawdown, or what happens when you're actually close to passing the challenge, the funded account. They don't tell you what happens when you want to make the money back before the session is over. And if you do not decide that before the session, pressure will decide that for you. So what you need is not just a trading strategy. You need what I call a proper execution system. Your strategy tells you what to do when the setup appears. Your execution system tells you what to do when pressure appears. That means you need a risk cap rule. How much are you allowed to risk before you reduce size? You need a loss response rule. What happens after one loss, two losses, or one broken rule? You need a trade limit rule. How many trades are you allowed to take before you are no longer trading the plan? You're just chasing. You need a dashboard rule. When are you allowed to check the account matrix? So you stop letting the dashboard manage your emotions. You also need a target and payout threshold rule. What changes when you're close to passing, close to the payout, or close to your drawdown? And you also need a review rule. When something goes wrong, was it the strategy? Was it the execution? Was it your risk? Or was it your emotions? Because without those rules, every problem challenge becomes a personality test you're taking without preparation. And with those rules, you're not trying to become emotionless. We're humans, we can't be emotionless. You're just making sure your emotions do not get permission to manage the account. And this is where the goal starts to change. It's no longer just about passing fast. It's about becoming harder to break. And once you start building that structure, the goal starts to change. You stop seeing the problem as something you need to beat quickly, and you start seeing it as something you need to survive properly. Because most traders walk into problems trying to prove something quickly. They want to pass quickly, they want the badge, they want the payout, they want the account to finally prove that all the work was worth it. And I do understand that. But guys, when you've been studying, backtesting, losing, restarting, and watching other people post payouts online, of course you want your turn. But that desire can quietly become dangerous, because the closer you get to the result, the easier it becomes to stop trading the plan and start trading the finish line. Trust me, that's when a clean setup is no longer just a setup. It becomes the trade that could pass the challenge. A normal loss is no longer just a loss. It becomes the thin standing between you and your payout. A quiet trading day is no longer just a quiet trading day. It becomes a frustration, because you feel like the market is wasting your time. And once everything becomes urgent, even a working strategy starts getting handled by an unstable trader. So the goal cannot just be to pass fast, because passing fast means nothing if you can become fragile every time the account starts testing your emotions. The real goal is to become kind of trader who can stay the same under pressure, same risk, same patience, same rules, same process. That is what gives your strategy the chance to actually work. A working strategy can get you into the game. Well, emotional stability is what keeps you there, because that is when a lot of traders stop trading the setup and they start trading what the setup could actually mean for their lives. The payout, the proof, the feeling that maybe this is finally working. So before you leave, ask yourself one honest question. If you have lost a challenge or breached an account before, be honest with yourself for just a second, because honestly, I've been there before and I'm still there with the all growing. Ask yourself this: was it really the strategy, or did you start trading differently once the pressure got real? Put that in the comments, because I think a lot of traders are dealing with the same thing quietly. And guys, if this is the kind of content you want, the kind of trading psychology that resonates with you, then stay close to the channel. Not for the hype, not for shortcuts, that's for sure. Just real conversations about becoming a trader who can really stay consistent when pressure shows up. I'm not sure which video is going to come up next, but if it resonates with you, please just click and watch the next one. I'll see you guys in the next one.